Veni, Vidi, Vici. I came, I saw, I conquered. That's right, we hit another century position, which is 100 shares of a stock by buying the one, the only, that's the one you all love to buy when you want to invest in Las Vegas. It is Vici Properties, ticker VICI. And Vici is one of the newer REITs on the block. They own a lot of the property in Las Vegas, and they were formed in 2017 when Caesars Entertainment went bankrupt, and Vici Properties came out of it as one of the landlords of the Las Vegas Strip. Now, this is in our self-directed IRA account, or the SD IRA as we call it. Oh, and if you ever want to know what's going on with the portfolios, head on over to DapperDividends.com, and you can click on either the self-directed, the Roth, or the bridge. Clicking on the self-directed IRA will take you to the dividendtracker.com, where you can set up a free portfolio for yourself. I do have a link in the description below, but you can always peek in if you're a voyeur and that's your kind of thing, looking at what people are doing from the safety and comfort of your own home. You can go and check on the portfolio and see everything we've got. And it hasn't been updated here, but on the lovely Simply Safe Dividends, it sure has. Hey, check that out. We got a yield on cost of 6.21%. Oh, and the self-directed IRA portfolio here is a locked-in portfolio, meaning that I started this with $30,000 in March of 2020. I haven't put in one penny more, so all of this gain is organic. But either way, if we want to see the percentage of the account, Vici is getting up there in the number 6 position. We got those 100 shares, average cost $30.57, current price $30.10. Now, I'm not worried that much about REITs because a lot of things have been going on with the interest rates that have been going up, meaning that a lot of funds and a lot of investors have piled out of REITs looking for those risk-free returns of 5% or so when you don't have to worry about it being in an equity. So there's been a lot of pressure on the REITs. But if and when the rates start to come down and they peak, I think we're going to see a lot of investors start to flood back into REITs. So we're kind of just hanging out here. I'm going to keep adding shares of some of the finer REITs and just wait. We don't know when that's going to be. But as my man Howard Marks said, in the real world, things fluctuate from pretty good to not so hot, but in the stock market, sentiment swings from flawless to hopeless. And as we see with some of the REITs like Realty Income, it's starting to look pretty hopeless, so this is just par for the course. So if we click on Vici, we'll see that they do have a dividend safety score of 50, current yield 5.51%. So their dividend has been growing every year since they went public. And actually they went ex-dividend yesterday, currently paying 41.5 cents per share or $1.66 annually. And we see that that dividend yield is a little bit above the 5-year average. And their price to AFFO, remember with REITs, we look at adjusted funds from operations, which is a way of looking at the cash flow generated from the properties after accounting for things like maintenance and improvements to the properties. So the REIT sector currently has a price to AFFO ratio of 13.2. Vici is actually a little bit higher at 13.8, which tells me that the market is valuing them a little bit more than the sector. So we look at their adjusted funds from operations payout ratio, which has been about in the mid 70% range. So this is normal for them. Pretty nice at 76%. And for comparison, look at a company like Realty Income has been trending down and they're at about 75%. And when we look at their AFFO per share, we always want to see that going up and to the right. That's really indicative of a healthy REIT, I think, or so I've been told. $2.18 expected over the next 12 months. And as a REIT that is still in their growth phase, which I think makes them so exciting, look at the sales growth, 76% in 22, 80% the last 12 months. AFFO per share growth, not too shabby at 14% the last 12 months. And don't worry too much about share dilution because, as I said, if we see that AFFO per share going up, I don't really think there's too much to worry about. And their total sales also going up into the right nicely. So it looks to me like they are making good use of that money, led by the one and only Ed Pitoniak at the helm. He's one of my favorite CEOs to listen to right now. And if we look at their net debt. It's currently at 41%. Now, if we pop on over to alphaspread.com, which gives intrinsic values, remember these are just guesstimates of future cash flows using to predict a price today that it would be good to buy at or not good to buy at. It's like knowing somebody needs to lose weight without knowing exactly how much they weigh. So it's just a range. But either way, Alpha Spread gives them an intrinsic value of $40.79 on the base case, meaning things are going to be flat for the next 5 years, 26% undervalued. And the worst case, about 5 years of negative growth, is going to be $32.93. So there is about a 9% margin of safety on Vici properties right now. So I think it's just a really good time to buy and hold Vici properties. Again, just my opinion. I am a welder, not financial advice. Now check this out. If we click on ownership, there hasn't been any insiders buying or selling as of late, but look at this. 34 purchases to 0 sales. So since going public, there have been 0 insider sales, which I think is really cool. So I'm happy to buy and hold along with the insiders. And if we pop on over to finviz.com, we can see that the insider ownership is currently at 42%. So it's not massive, but it's still nice to see that none of the insiders have sold any of their shares. So when did Ed Pitoniak, the CEO of Vici, last buy shares? Well, we go to ceobuys.com, handy dandy little website, which I'll have linked below. And if we click on Vici and search up them, we'll see that it's been 4 years since Ed Pitoniak bought shares on March 3rd of 2020, where he paid $24.60, and on August 13th, 2019, paid $21.29, and then I'm guessing right after they IPO'd on February 5th, 2018, he bought shares at $20, and he has not sold any of those. And if you'd be so kind when you are at dapperdividends.com about to check out what we got going on in the portfolios, if you drop your email address in that bar, you will be signed up for our free weekly newsletter. Comes out every Sunday. And you can also click this link and get this guy's free ebook, Brief Thoughts on Life, Love, and Investing, something I put together a few years ago for my kids to have in case I got hit by that proverbial bus. So if you're a stock pick junkie that can't wait to get another fix of what stocks to buy, hey, click this little floating box right here next to my head, and I got 10 undervalued dividend stocks for you to consider, put them on your radar, and potentially look at buying right now. If you do that, I will see you there.